mean, first, I think the narrative around Bitcoin tends to shift, right? You go all the way back to the founding. It was a peer-to-peer electronic cash. So we're going to buy pizzas with it. Okay, the guy did. But he says, oh, you're an idiot. No, we should all thank him and like bow down because he proved that this thing could allow us to exchange value without a trusted third party. Awesome. I mean, amazing.
About 2 weeks ago, Fed Chair Jerome Powell told the House Financial Services Committee that the high inflation and jobs report in January did not change the Federal Reserve's view that interest rates should be lowered later this year. However, he did say that officials need more proof that inflation is slowing before moving forward. We want to see a little bit more data so that we can become confident, he said. Powell said that the goal is not for better inflation numbers than the ones we already have, but for more of them. Powell also said that the U.S. economy and labor market were showing signs of strength. The recent strength of the economy and labor market means that we can approach rate cuts with care and thought. The Fed chair also said there was no reason to believe the economy was in or was facing a major near-term risk of recession. The market interpreted Powell's comments as a positive sign that rate cuts would be announced in June. Morgan Creek starts Mark Yusko thinks that doing so would be a huge mistake that could cause big problems for the U.S. economy. In a recent interview with Anthony Pompliano, Yusko talked about his predictions for the U.S. economy in 2024 and beyond, going into detail about rate cuts, inflation, and how technological advances will soon change the global economy. We will now show you clips from the interview, but please take a moment to like this video, subscribe to the channel, and turn on post notifications to get more videos like this. Thanks and enjoy the video.
So many important points to unpack. First, I think the narrative around Bitcoin tends to shift, right? You go all the way back to the founding. It was a peer-to-peer electronic cash. So we're going to buy pizzas with it. Okay, the guy did. But he says, oh, you're an idiot. No, we should all thank him and like bow down because he proved that this thing could allow us to exchange value without a trusted third party. Awesome. I mean, amazing. But it went from that narrative to, oh, it's digital gold. Okay, fine. And gold is an inflation hedge. And so these people say, well, if it's digital gold and it's better, I'm going to buy it because it's easy and I don't have to store it and I have to carry around these big gold bars with me. Okay, fine. But I agree that it's digital, it's scarce like gold. And I believe it's the monetary base for the future, right? Gold's been the monetary base for 5,000 years. And what I mean by that is all the central banks own gold, right? It sits at the base level, and then they create currency on top of that, right? Money is an asset that exists in the absence of a liability. That's been gold. I mean, sometimes it was silver and sometimes it was a few other things. But bottom line, there aren't that many things that exist in the absence of a liability. Currency, dollars, yen, euros, all are backed by debt. They have a liability, associated liability. So they're not money the way we think of money. So I think of the digital gold argument as the monetary piece. Like there's 12 trillion-ish of gold. Half of that is jewelry, artifacts, chalices, gold leaf on the Golden Dome where I went to school, all that good stuff. That doesn't count. That's the commodity part. And gold was the one thing that for years was both commodity, which is kind of an inflation hedge, and currency, right? It was money. And so that Bitcoin narrative was there. But now I like the narrative that Saylor put out there the other day, that it's really digital property, right? It's property rights. And that means it's much, much bigger. And I keep talking about the fact that in the QE era, right, when money supply was expanding, the price of Bitcoin, quote unquote, went up because we measured it in the thing that was devaluing. And this is the part, right? My sign over there, right? One Bitcoin is one Bitcoin. Will always be one Bitcoin. But you and I don't, I mean, you and I might, or Jason and I, we might, But the average person doesn't talk in Bitcoin terms. Mm-hmm. They talk in dollar terms or yen terms or Bolivar terms. But if you lived in Venezuela, there really has never been much of a bear market in Bitcoin because the Bolivar was going down so fast, or Turkey with the lira. So it's not that Bitcoin necessarily gets better. It just is. It's that the currency keeps getting worse. But here's the thing. The last year, M2 went down in the United States. Only twice in 100 years has that happened. And it happened in the last year. Well, wait a second. Then Bitcoin prices should have gone down. If we're restricting the dollar, right? We're not creating as many dollars, then Bitcoin price should have gone up. But Bitcoin prices went up 200%. Well, what happened? Supply and demand. And this is where the differences come in, that you can have a change in value of an asset because the currency you value it in is changing. I always talk about my house, right? According to Zillow, my house went up 50% here in Chapel Hill over the last 2 years. That's ridiculous.
Not only Yusko is suspicious of manipulated inflation statistics and how it is used to trick Americans, but so are many others. Last month, Lawrence Summers, who used to be Secretary of the U.S. Treasury, released a study with others that looks at how high interest rates affect American consumers. The study, called The Cost of Money is Part of the Cost of Living: New Evidence on How People Feel About It, anomaly looks into a method of measuring inflation that is older and more exact. Summers says that the older method shows how much economic pain Americans have really been through since 2022 because prices have been going up. Personal interest rates and housing costs were included in the system before it was shut down in 1983. When these two numbers are added together, the authors of the paper say that it paints a more worrisome picture of inflation right now than the official inflation numbers from the Bureau of Labor Statistics. Summers wrote that mortgage costs before 1983 and car payments before 1998 were included in the CPI. However, costs of borrowing money are not included in price indexes anymore, so when interest rates went up last year, official inflation did not fully reflect how it would affect people's well-being. Continuing, he said, "We show that if we try to reconstruct the CPI of Okun's era, which would have had inflation peak last year around 18%, we are able to explain 70% of the gap in consumer sentiment we saw last year." This showed that personal interest payments rose by over 50% in 2023, but are missing from the U.S. government's data, which is an important point that economists have been pointing out for years. Let's go back to Yo's interview.
It's great. Great question. So when do we become on a Bitcoin standard? I think it's actually a long time away. And the reason is, as much as I believe in Bitcoin being better money, I actually don't think anytime soon the nation states are going to abdicate their right to control their particular money. Right. And look, I don't know if you've ever had Murray Stahl on the podcast. You should have him on. And he makes us look bearish. Like, how is that even possible? Right. But he makes us look bearish because I talk about this all the time. To me, Bitcoin displacing gold as the base layer of money, easy. $6 trillion market cap. That's like you can bank on that. That's totally easy. The next step, which is where the good money crowds out all the other money, and we start talking about, to your point, not Bitcoin in dollars or Bitcoin in yen or Bitcoin in euros, but euros in Bitcoin or dollars in Bitcoin, because it is the standard. There's a book called the Bitcoin Standard, right? But that's inverse to Gresham's law. Gresham's law says the opposite, that bad money always crowds out good, right? Gold is good money, but other paper money always crowds that out. People want to use the bad money because I don't even understand the exact reason for Gresham's law, but it's a law, right? And if you look at history, that's what happens: is people flock to the worst currency at the worst possible time, and that's why you get the hyperinflations eventually, Zimbabwe and Argentina and Turkey. So what Murray says is we're going to get a reverse Gresham's law. And this good money, this Bitcoin, is going to eat all global currency, which today is about 86, 87 trillion. Well, just round it to 90 or round it to 100. Doesn't even really matter. Trillion here, trillion there. Pretty soon you're talking real money. That one's harder for me because I think we've seen how hard people are fighting just on the little stuff. As Bitcoin starts to siphon money out of the banks. Right? We all experienced that with, we saw the lenders pop up and people took their fiat, converted it to stable coins or Bitcoin, and got paid interest in a zero interest rate world, which was unnatural. And the banks were like, 10 billion, who cares? 100 billion? Now we got a freaking problem. Now we're going to make it, illegal or unethical and we're going to put people in jail. And there's still people in jail for writing code. It just boggles my mind. So I think it's a long-winded way of saying, I think they're going to fight it really hard for a long time. And the smartest people are going to get that, and they're going to increase their exposure. I mean, look, you and I have been talking about this for a long time. Get off zero, right? Zero has always been the wrong number.
Why Wu, a well-known Bitcoin on-chain analyst, says the leading cryptocurrency is only taking a short break and we will be back on track soon. In a recent post on X, Wu described a Bitcoin signal that compares network flows into Bitcoin with price action. According to Wu, the signal likes capital inflows and dislikes risky price action that makes the market more volatile. This is a Bitcoin long-term risk signal that he has been working on scale in when risk is low and scale out when risk is high. This means that he thinks people should enjoy the dip while it lasts, because this isn't the top, it's just an all-time high consolidation. Wu said in another post that Bitcoin might get a double top before the bull market finishes. At the rate the Bitcoin macro index is pushing, it wouldn't surprise me if we got a top by the middle of 2024. This would point to a double pump cycle like the one in 2013 and a second top in 2025. Please tell me what you think about Mark Yusko's interview and Willy Wu's very optimistic expectations for Bitcoin in 2024 and 2025. It would be great if you could give this video a thumbs up and subscribe to the channel so you can see more videos like this. Thanks for watching.